Hey, it's Bill Gross, and after review this week of real estate industry news, all I can say is liar, liar, pants on fire to Yahoo Finance and Fortune Magazine, who again are looking to mislead people about where the market is. And I can also summarize and say, right now there is no market housing crash going on. It may come in the future if things change, but right now it's not there. Let's get into the details. You know, I talk about regularly the misinformation in the real estate industry, and I think in some ways it's a continuation of the same thing people talk about in politics about fake news. And I want to share with you a couple examples I think are really bad. This one, Fortune Magazine used to be a fantastic magazine. And I guess in the internet age, they have to be more competitive and resort to clickbait. Here's one article. The U.S. housing market downturn will be worse in 2023. Now, the housing market has a downturn. The industry has. What's the difference? The market are people buying houses, selling houses. The prices haven't gone down. The activity slowed down, but the prices have stayed the same, actually gone up quite a bit at a slower pace than the prior year, perhaps. But what happens is they throw in the name Goldman Sachs, which is an impressive company. When you read the article, what they're talking about is home building activity has gone down. Home sales has gone down 17%. Of course, housing prices went up by 19%. So if sales go down by 17, but the price goes by 19, actually there's more money being spent on housing. And so they create this term called a housing recession, which I never heard of before until recently. They're trying to make something sound scary. A housing recession refers to the housing industry, real estate agents, home builders, and the like, and that their business is going down for a couple quarters in a row. Well, that's not surprising. I mean, it's like Peloton. They sold a bunch of bikes and mirrors when the COVID was at the peak and people had to work out in their houses, not in gyms. But as gyms have opened back up and outdoors are opened back up, they're buying less Pelotons and less mirrors. And so the market's really is adjusting back to a normal, I think, towards the pre-pandemic numbers. As such, it's adjusting as an industry. But prices are not adjusting as a result. People have more money. As a result, prices have gone up quite a bit. So this is misleading, number one. Number two, Fortune Magazine, double trouble this week. This is where the housing market goes next, as told by two charts. Now, by definition, two charts generally refers to the past, right? We plot data points that happen. Normally, housing charts don't predict the future unless it's an actual projection. So what are the two charts that they talk about, the two magic charts? Number one, spiked mortgage rates are no joke. Mortgage rates went up. Well, that's true. But again, if you look at the chart, they went up and peaked in June. That was like hitting the brakes on the housing market. And then slowly we've gone back a little bit to where people have been able to, the rates have gone from 6% down to 5.9%, but they have not continued to go up. That's the key thing. And so it put brakes on the demand, but didn't stop it. People every day are still buying houses. People call me on my listings and pending escrow every single day. But this doesn't predict the future, right? If you can predict the future of mortgage rates, you'll predict the market. And in fact, in the article, it says that they expect rates to go down or stay around 5.5%. So they're saying rates are not going to go up. That was what scared the market. The scaring of the market was the possibility of never-ending increases in inflation and fears, not that the rates at 5 or 6% stop things. And then you had the mortgage payment to income ratio, or the affordability factor. And to me, this might be an important political issue that the middle class can't afford to buy houses going forward. But we only sell 5 million houses a year as an industry with a population of over 300 million. So it doesn't mean that everybody has to be able to buy a house every year. It means people buy houses and tend to live there for 7-10 years. But the fact that less people can afford them may or may not be important. There's more people who can afford them than more people buy houses. So again, this chart is very ominous, maybe politically, but it really has very little to do to project. Again, the title, Where the Housing Market Goes Next. I have to say, a big Pinocchio on that article. The next is just an outright, I think, fabrication of data by a source I've used a lot in the past, Yahoo Finance. And I have to say, liar, liar, pants on fire. So here's their article. You can see I was shopping for shirts. Their article is, these top 5 housing markets are expected to crash first. Now, first of all, when you say they're expected to crash first, that means for all the others. Number one. Number two, they're projecting a housing crash, not a slowdown, a reduction of rates, a return to historical norms. No. They're expecting these 5 markets expected to crash first before other ones come and crash. Well, that's a pretty bold statement, Mr. Brian J. O'Connor. Let's see what your basis is. So when you read the article, he bases it on Fannie Mae saying, where was that? Fannie Mae saying, here you go, that housing prices are higher than they should be by 15%. But Fannie Mae doesn't say that. Fannie Mae doesn't say that housing prices are higher than they should be. They do say how housing prices went up, and they do make projections into next year. I have them. Now, it's interesting. They have all kinds of hyperlinks here on Yahoo. You'll notice the blue there, blue there, blue there. But they'll hyperlink the Fannie Mae article about the 50%. Why is that? Because they didn't say that. This is the Fannie Mae Housing Forecast, August 2022. I just happen to have it. I review it regularly. And it gets a little technical, but if you read here, the percent change quarterly, year over year, Fannie Mae HPI, that's their housing price index. So what they're saying is in 2021, by the quarter, housing prices went up 12.9%, 17.2%, 19.3%, and 18.9%. And so far in 2022, prices went up by 20.5%, 19.4%, and based on the data they have already, they're projecting a slowing to only 17.4% and 16.0%. And next year, they're projecting slowing, 11.3, 7.8, 6.3, 4.4. It's a slowing. It's not a crash. But more importantly, they're not saying housing prices are too high. They're saying prices are adjusting to where the market is. They're not saying next year they're going to crash for sure. So to say that Fannie Mae is saying the housing price is too high is just a misstatement of the facts. And in fact, even this lowest number, 4.4, is higher than the historical norm, about 2 to 3% nationally. It's still what we would call great housing market. And also, by the way, this is telling you that if you buy a house, let's say in the third quarter of 2020 right now, or the fourth quarter, you should expect over the next year an 8% increase on a house you're buying with a mortgage at 6% or less. You're only putting down 10, 20%, and the rest is going into value, but your investment is leveraged. What a phenomenal housing opportunity instead of projecting the housing market crash that they have. But it gets worse. Because you might say, well, Fannie Mae says there's going to be a crash, which they don't. Which one's worse? What's the basis for that? Not Fannie Mae. It's according to Consumer Affairs poll. Now, Consumer Affairs is a magazine and a website. Is their poll scientific? I don't know it to be. Is this poll scientific? There's no information. They're just taking an article they read in Consumer Affairs and taking the 5 cities. I guess you could randomly pick any 5 cities. And if Consumer Affairs, if you throw darts at a board, the 5 they come up with, that becomes an article to talk about the housing crash. That's really all we've done here. Because they talk about the median price and how much has gone up. It doesn't say it's going to go down, but what they do to scare you is, well, if prices went down 15%, it would be a drop of $97,500. Well, that sounds scary. It is scary. It's just not. There's no basis in fact for that to happen. So we have Yahoo Finance basing the whole article on who knows who Consumers Affair poll is of. Is it of homeowners? Is it of people who know anything about the housing market? Do they own houses? Are they buying houses? We have no idea. We just know Consumer Affairs did some sort of a poll. We're going to take the results and use that as the basis to determine the top 5 housing markets expected to crash first. So, what's all this mean? You know, I just finished reading a book by Robert Kiyosaki, one of the masters of personal wealth and real estate. And he talks throughout the book the importance of learning the fundamentals yourself and not being misled. For some reason, our school system does not teach personal finance. I don't know why. And people come out of school misled. They don't know how to write a personal financial statement. They don't know how to buy houses and accumulate wealth and minimize legally their taxes. And then we have an industry like this, Yahoo Finance, Fortune Magazine, who prey on people by getting them to click and buy their advertisements rather than make informed decisions. But how does it affect you? Well, look, it was a time for you to sell. It's a great time to sell. Unfortunately, my best friends is selling his house in LA, moving to Florida. But because it's such a good market, they took the equity out, bought the house in Florida, locked in the price, locked in the rate there, and they can sell now in a comfortable way with not disrupting their family. And if it's a good time to buy, I have clients and families who have made great money the last couple of years and are able to buy a house and enjoy a home and enjoy locking in a rate for 30 years. And if rates ever go down, they'll be able to lower the rates just like homeowners have over the last 20 years. So you have to decide if it's a good time for you and not let Yahoo Finance or Fortune Magazine interfere with the right decision. If I can help at all, I'm Bill Gross, the LA Probate expert. Call, text, or email me. As always,